This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, December 18th, 2015. Euro dollar. So clearly the euro has come back under some intense pressure over the past several sessions, with the market now putting in a potential lower top at 110.60. But the market will need to establish below 107.96, that low that we had seen back on the 7th of December, to officially confirm the downside pressure and accelerate declines. Inability to establish a daily close below 107.96 would suggest that the market could be comfortable with a longer-term consolidation before it decides to head lower. Again, the key levels to watch above and below continue to be 110.60 above, where there's a potential lower top, and 107.96 below. Sterling dollar. So cable continues to adhere to a downtrend off the 2015 high, a very well-defined downtrend, making a nice series of lower tops and lower lows. And on Thursday, a fresh lower top was confirmed at the level of 152.40, following the breakdown below some recent lows at 148.95. This latest break now exposes the next major downside extension to a measured move objective, which coincides with a 2015 low at 145.66. At this point, only back above 152.40 would compromise the immediate bearish outlook for sterling dollar. Dollar yen. So dollar yen continues to be very well capped on rallies ahead of 123.76, and so long as the market holds below this level, there's risk for deeper setbacks below the recent lows that we'd seen down at 120.34. At this point, a break below 20.34 would open the door for an acceleration for deeper setbacks into the 118 to 119 area, which guards against the August low at 116.12. Again, only back above 123.76 would compromise the newly adopted bearish outlook for dollar yen. Euro Swiss. So Euro Swiss remains confined to a tight consolidation over the past several months, though again, in the context of the recovery out from record lows earlier this year, the recovery outlook remains intact, with an eventual upside extension favored beyond the recent high at 110.50 and towards the 115 area further up. Only back below 107.14 would compromise the recovery outlook for this market. Aussie dollar. So Aussie has been trading back under pressure in recent trade after once again stalling out by some key resistance just ahead of 74. Overall, the downside pressure remains intact, and the market is seen back towards those recent multi-year lows from August, just shy of 69. Only back above 73.85 would compromise this outlook. Dollar CAD. So dollar CAD continues with its surge since breaking above the previous 11-year high from September at 134.57, making its way all the way up to 139.87 thus far. The market has stalled just shy of the 2004 peak, just over 140 at 140.07, and could see a test of this level in the sessions ahead. At the same time, daily studies are tracking in highly overbought territory, so there is risk for some form of a correction before the market looks to reassert the uptrend. Look for any setbacks, though, to be very well supported by that previous resistance now turned support at 134.57. Kiwi dollar. So Kiwi is poised for a resumption of declines following the latest breakdown and stalling out ahead of that critical resistance in the 69 area. A medium-term lower top is sought out in the 69 area ahead of the next downside extension back towards and eventually below those lows that were seen back in August in the 62 area. Again, only back above 69 would compromise this bearish outlook. SPX 500. So the S&P 500 continues to show signs of topping out after the market had stalled out recently on Thursday after trading up just shy of 2100 and stalling around 2080. At this point, a daily close below recent support that was seen at 2003 would help to strengthen the outlook and accelerate declines back down towards the 1870 area, which is medium-term support. Again, the market had taken out 2003 earlier this week, but will need to close below that level to convince and accelerate declines. At this point, only back above 2117, that high that was seen on the 3rd of November would compromise the newly adopted bearish outlook and put the pressure back on the top side, exposing the record highs from May at 2137. Gold. So gold continues to consolidate just off the recent multi-year low at 1046, though a break and close below 1046 would open the door for an acceleration towards the psychological barrier, the critical psychological barrier at 1000. But again, inability to establish a close at below 1046 will keep the possibility of a base intact, although the market would need to see a break back above 1100 to officially alleviate immediate downside pressures and accelerate declines and increase the prospect for some form of a base in this market.